morning, everyone. It's Wells Only, and it is June 15th, 0800 hours in the year of 2021. We're going to look at chart. This is a chart set video for the crossover for June 14th, 2021, and we're going to get right into it. Disclaimer: the information displayed in this broadcast is known to cause increased amounts of FOMO. Wells Only is alone and is not responsible for any losses you may accrue for having weak hands, the type that don't stake accordingly. So make sure you do your own research or ask for verifiable information so you're not left holding nothing. Alright, so let's get into it. First things first, let's all remind ourselves of what an economy is. An economy is made up of two actors. You have the private sector, which is generating value, and the public sector, which is a detractor of value. Always make sure you keep that in mind when you're thinking about what is actually happening at the economic level, as far as policy goes, because we can try to ignore it as much as we want, but it ultimately affects us because the public sector strictly detracts from the private sector. And as you can see, any economy is one pie, meaning we're all trying to extract value from that pie by providing value. So typically, if you're an individual that is trying to make a living, you either have to get a job or provide value. And that's true for all actors in this bucket, that being the private sector of the economy. That is not the case, however, for the public sector, which is just a leech on all of us. In exchange for facilitation of support, team services, and facilities, and things of that nature, which, if you sit there and think about it, you really don't receive the value that you give. And this is why I start off every single thing I do with this. So let's get into it. Alright, first 547 days, and what we're doing here is we're comparing the price performance between Bitcoin, Ethereum, and HEX, along with the T-share index, which is a value proposition for HEX, for the first 547 days of its existence. Now, what we're looking at here is Bitcoin, which is a flat line because it's had no price performance yet on a live market until its first 562nd day of existence. Ethereum is at 950 on the index, rounding up. HEX index is at 43,245. T-shares index is at 77,438. Now, the important thing to realize here is that this trend line is depicting the return stream's nature. Now, what do I mean? What this means is that no matter whether people buy or sell, as you can see over time, price is going to maintain this structure with respect to its returns. So what does that mean? That means that no matter if price goes up or down, it's going to stay within this range, within the range of the trend line. And that's important to understand because, long story short, whether you get into this line, whether you got into HEX here or here or here or here, at the end of the day, what matters is your exit point, because the longer you hold this trend line, the higher the values are going to be at the end of the ride. That's just how it works. The same thing for Ethereum, right? This is Ethereum's 547th day as well. And if we were to update this chart with all the data points for Ethereum to present day, the return would not be 950 on the index, or the rating would not be 950 on the index, which is approximately 850% return on this chart. It would be significantly higher to be in line with today's price, because this is only the 547th day of Ethereum. Ethereum has been around for at least 6 years at this point. So I hope that this chart makes a little sense. If not, let me know in the comments. The next chart is the HEX post-payday chart. And now what this chart is showing is the price action after HEX's big payday event, which was the end of the launch phase that occurred on November 19th, 2020. And what happened that day is that all of the inflation in the HEX system got released in one shot. So that is it. There are no more halvings as far as the system goes. What we now have in HEX is merely the end staking as the halvings, and we'll go into that once we get into the appropriate chart. For now, what I'd like to highlight is the fact that HEX post-payday has flipped all of the Bitcoin halvings, the first, second, and third, to the tune of 122%, 1,094%, and 730% respectively. I mean, this is just phenomenal performance. I personally did not expect it to happen this quickly, and I'm just glad that I was a person that recorded this. Now we all know for a fact that Bitcoin is outperforming, excuse me, that Hex is outperforming Bitcoin at every turn. First halving, dusted. Second halving, dusted. Third halving, dusted. And we're still going, and this is only day 208 going into day 209. So these are things to think about when you're thinking about what you own, or if you're new to Hex and you're trying to consider whether it's worth getting into or not. Just consider this chart if you're new. I got in approximately around here. And at that time, the return stream for Hex was 2,500% approximately. And now, or the reading on the index was 2,500%, and now we're at 43,000. So just 6-7 months, right? And this is the type of performance that we've already seen in Hex. And this is thanks to the value proposition, which is the T-share index, and we'll get into that. All right, so now we're looking at T-shares versus Ethereum, which is the pink line, and T-shares versus Bitcoin, which is the orange line. Now, this is the value proposition for Hex. This is what maintains Hex loftiness in the market, because every day people are not paying for Hex. They're actually paying for T-shares, which is what allows you to obtain more Hex. And that's the whole goal, to make crypto from crypto without having to take, uncalculated risks, right? And when you're sitting there and thinking about participating in the market, trying to generate alpha or returns of any kind, the most important thing to remember is the quickest way to make money is by not losing it. Right? That's the quickest way to make money, because what that means is that when you lose money, you're losing the ability to participate, hands down. So that is by default the removal or the strict cost of opportunity, right? Because you no longer have it, because you no longer have capital to participate. So this is why Hex is superior, right? You're allowed to buy Hex, stake Hex, and not have to worry about the downside, because depending on the length of your stake, you're getting at least 12% per annum on an annualized basis, right? And these are the important things to remember. And now, as we look at the T-shares versus Hex and Bitcoin, we just keep making new highs, meaning the value proposition is just doing what it's supposed to do, which is attract capital from outside of the system. Now, T-shares versus Ethereum is at 65%, and T-share versus Bitcoin is 4%. Now, this is the value of a T-share versus Ethereum and Bitcoin. Not numbers to scoff at, for sure. Moving right along. So here we're looking at the Hex stock to flow dynamic tracker. Now, why dynamic? Dynamic because the T-share rate is what determines everything in the system. Now, where does the T-share rate come from? The T-share rate comes from the dollar cost value of a T-share divided by the dollar cost value of 10,000 Hex. And what we naturally get is a ratio, right, which is going to be 1.792285. Now, how does this number get to 17,000? Well, it gets to 17,000 because in reality what we're doing is we're multiplying that number by 10,000 in order to get this ratio. Because this is what tells us what the starting is, or the starting rate for Hex was 10,000. So this is why that was 10,000 from the start, which gave us a cost of whatever 10,000 was by the number of Hex, which at one point in time was approximately 60 cents for a T-share, believe it or not. Because now it costs $1,685 for a single T-share. And this is the value proposition for Hex, and this is how we end up with this T-share rate. The T-share rate is there to keep the system in line with itself. Right? Now let's think about what that means. The dollar cost of a T-share and 10,000 Hex is what gives us the T-share rate, which is a ratio of both of these. So it's essentially a circular system, right? A closed system, because you have these two items maintaining this and ensuring that this does not get away of this and that these don't escape this. If that makes any sense, because they're all tied together. You do not get this number without getting these numbers involved. And when one of them gets out of whack, let's say HEX goes down, T-shares still go up, right? Because this is how it works. Now, why is that? Well, let me explain. Every time a stake is ended, the stake end is a function of two things with respect to the T-shares and how it changes the valuation. At the end of a stake, you're actually minting your coins only then and there. So what do I mean? So let's say you have a year-long stake. For that year, you're printing HEX with respect to your payout per T-share, right, which is a function of the T-shares that you actually own in the system, right? So let's say you have one T-share. That means that every day you're going to get paid a specific amount of HEX, right? And that specific amount is going to be a function of the number of people in the pool, and by the pool I mean the staking pool, right? Total T-shares is a function of that. And the payout is going to be divvied up with respect to how many people are in the system, right? How many T-shares are in the system, and what is the payout going to be with respect to that? And that is what yields you your payout per T-share, which last night at crossover was 5.824 HEX, with a daily payout of 64.4 million if you round up, giving us a total T-share count of 11.05 million shares. Now, why is this important? This is important because when we go to this chart, the payout per T-share sum line is merely the aggregate payout that each staker has received since inception for one T-share. Now, that's just HEX. That's just the plain old nominal number. What does it look like in a return sense? Well, it looks like this: 197,000%. Something to think about. Now, let's go back to how T-shares work. T-shares are a function of two things: how long you're staked for and how many HEX you're actually staking. The more length you add to your stake, the more shares you get. The more size you add to your stake, the more shares you get. So at the end of a staking session, right, whether it be 7 days, a year, the system is going to determine which of the two items, whether it was time or size of the stake, will impact the T-share rate at the end, because at the end is when the T-share rate is reassessed for each stake that is exiting the system. Now, the important thing to remember is that when a stake ends, you're limited by the present cost of the stake or of a T-share in conjunction with the fact that you were staked already. So the system is going to take both of those items into account, right? And then those items in conjunction with how long you were staked and how big was your stake are going to affect how many shares you can actually extract from the system in order to continue earning interest after your stake ends. So long story short, the T-share rate is determined by the end staking function in conjunction with the size of the stake being ended and the length of the stake being ended. So this is why the T-share rate always goes up. You have a continual halving of sorts, meaning a continual inflation being pumped into the system, which is thereby adding an increased valuation to the system, which the system then has to account for. Right? Now, why is this important? Why does this drag HEX up with it? Why is this such an important thing to understand? Well, we're going to get to that shortly. Let's keep going. And as we talked about already, this payout per T-share sum line is the aggregate of the total HEX received for one stake T-share. And the important thing about this chart is that the HEX index is always going to traverse this line. Now, what do I mean? If you look at it across time, it's touching the payout per T-share sum line, if not getting close to it. But what you can't tell because of how old this chart is that the scaling for the HEX index, which is this pink line on the right side, is always going to expand, right? Greater than the payout per T-share sum line, because we're going up at a rate of 8x roundabouts versus the payout per T-share sum line. So what do I mean? The HEX index is at 40,000, whereas the payout per T-share sum line is at 2,000. So 40 divided by 2 is what? 20. So 20x. Sorry about that. So the sum line, the payout per T-share scale is 20 times smaller, right, than the HEX index scale. So what you can't see is the fact that it touched it every time it hit a high, reversed or pulled back to then touch it again, right? So what's been happening lately is that the sum line is getting touched and moved up, right? And the price performance is just following it, because you'll see shortly why. Now, the payout per T-share sum index is just a return variation of the payout per T-share sum line. And as you guys can see, it's 197,000 on the index, which is approximately 197,000 on the return aspect. We're just subtracting the 100 from this value. Payout per T-share index is 4x, and the daily payout index is 170x. I mean, these are just phenomenal numbers that you're just not going to find anywhere else with respect to a system increasing its payout to a participant within that system. We already went over the HEX payout metrics for the day, and just to hash it over again, given a total pool size of 11 million and a half, or 11.05 million trillion shares, gives us a daily payout of 64.4 million HEX, which payout per T-share ends up being 5.824 HEX. Now let's get into the expiring shares chart, because this is what gets that T-share rate ratcheted up, right? The shorter the stakes and the bigger the stake at the same time is what's driving this T-share rate higher. And if you guys have seen any of my old videos, you'll see that back in May we were around the same level and dropped all the way to 20%. Well, before we actually dropped off to zero and all the stakes expired for the month of May. And then we saw the ratcheting up of the share count for June and July as well. Now, as of June 8th on this chart, we're looking at about 45% for June and 22% for July. And when we move to 610, it's basically the same. A little bit higher for July, a little bit lower for June, but it's essentially the same, a few percent difference. Now, when we go out to 615, which is today's date, we've had 5 days pass, and we've seen an increase in the share count all across the front end of the board. So we're at 47% approximately for the month of June, total shares existing within that cumulative sum. And for July, we are now at what looks to be like 31% from about 25% or so. So the stakes are now moving out along the curve, and if we're looking at what looks to be like November, we have an increase in that month as well, November 2021. So things are moving along. People are interacting with the system, and we're seeing that in the T-share rate as it ratchets up. I think we're at 17,882 at this point. I mean, it doesn't stop. I'm false. 17,888 is the latest share count. I mean, this thing is just beast mode, right? Beast mode. Now, all-time correlations for HEX versus Ethereum and Bitcoin. Now, what I like to highlight is basically the correlation is already zero, because this is an all-time correlation. So if you don't understand how we got to zero on both versus Ethereum and Bitcoin, I recommend you go to my YouTube channel, Whales Only, or youtube.com/Whales Only, and in there you'll find my correlations stream, which I did approximately a couple of weeks ago. It's with under the macro, or the HEX macro set of videos. You can find that there, and I go into detail as to how this correlation is zero over time and why it's always going to be zero. I go into real refined detail in that video, so please check it out. The important thing to note from this chart at this point in time is that HEX returns are on the x-axis, Ethereum and Bitcoin returns are on the y-axis in both charts. And the cool thing is that HEX is primarily on the positive side of its quadrant for the x-axis, and Ethereum and Bitcoin are not primarily, right? They're spread out pretty much over the negative and positive side of the y-axis, whereas HEX is primarily postulated on the positive side. So if you're looking at all of the data points, you'll note that the ones in the x-axis are primarily on the right side of the zero for HEX, whereas the ones on the y-axis are spread all over for Ethereum and Bitcoin. Now, when a professional sits down and look at this, they're going to be impressed, and the decision is going to be easy. This is why I like to show this chart so people can understand that. Now, moving right along, this is the world of correlations for HEX, the price of HEX versus the price of T-shares in dollar terms. And what I want to highlight is that presently the 55-day correlation, which is the longest and the hardest to maintain at a positive clip because it's the longest fixed period of time in this specific chart, is at 99.97%. What does that mean? That means that HEX and the T-share dollar cost of the T-share are moving in tandem. So if the T-share rate goes up, or the T-share cost goes up, the cost of HEX is going to go up along with it. And that's been the case really since mid-May, right? Really since mid-May. So a whole month this correlation has basically been one. And as you guys can see, the 21-day correlation started sooner, the 34-day correlation started a little bit thereafter, and the 55-day finally joined, but much later. And this is why I like to focus on the 55-day correlation, because it's the hardest one to keep pinned down. Now, it'll be the first one to the last one to also break the correlation if it does deviate again. But we'll see the 21 and the 34-day first before the 55-day if the correlation does break down. But as of now, this is why you want to own T-shares. And to be honest, this is why you want to own HEX in general. The T-share rate or the cost is always going to go up, right? Thereby dragging the dollar cost of HEX up along with it. Let's keep going. So here we have the dollar cost of the HEX payout per T-share, which gives us the summed value, i.e. the future value of HEX. And I've also added the exponential line for the future value of HEX. Now, why did I do that? Well, this is similar to me adding the trend line, the power trend line, to the return streams for HEX at the start. This is literally tied to the payout per T-share because it is a summation of both, right? The adjusted HEX value. I could have easily put this line on the payout per T-share and it would be the same. So as we see here, the dollar cost of HEX is 9.4 cents at the cross last night, June 14, 2021, which yielded a payout per T-share of 54.75 cents based on the 5.824 HEX per T-share that were paid out last night, yielding a adjusted HEX value of 64.15 cents. Now, why does this matter? What I want to highlight is the fact that as payout per T-share, the pink line, marks time, HEX follows suit thereafter. Same thing with the yellow line, but in a different capacity. So what do I mean? Let's focus on the payout per T-share line first. We have it mark time here, then HEX comes and marks time thereafter. It again comes and marks time here, then HEX comes and marks time there at that level, right? 1 cent, 7/10 of a cent, 8/10 of a cent thereafter, right? That's what it does for a long time. Now this is the pink line, payout per T-share that we're tracking. Now again, it does the same thing in the near future, right? 3 cents, 3.5 cents, and that's where the breakout ultimately happens, right? And we see that right here. And that's the cool thing to know. Right now, we had the pink line, payout per T-share line, mark time here, and we also have price traverse there. Right now, here's where we've been at lately, 30 to 35 cent area in the payout per T-share sum line. Very cool. That is more than likely going to be the next stop in HEX before we actually start consolidating significantly, right? Meaning a period of time that makes it obvious that we're consolidating like this or like that or like this, right? Not just going up a little bit sideways and going up over a day or two, right? So now when we look at the adjusted HEX value, which is a future HEX value, what you're going to notice is that that works a little differently. Now, what do I mean? Now, let's focus on the yellow line for a little bit, and let's see how the price of HEX reacts to it. Now, we'll see that over time, the yellow line is the leading indicator, or the foremost leading indicator, whereas the payout per T-share is the second foremost leading indicator. That's really what's going on with these two lines, right? They're leading indicators. So you can pretty much determine what's going to happen in the future based on these two lines. So the yellow line is kind of where HEX stops at when it breaks out, right? So what do I mean? Payout per T-share, or the adjusted HEX value, is always going to keep going. But wherever the breakout occurs on that adjusted HEX value, seems to be where HEX ultimately stops on a breakout and reverses and then marks time. And we see that effect here. We see that effect here. It broke out here and HEX kind of stopped, went a little bit sideways, but that was during that big whale move back in 2020, in the spring of 2020. So it kept going then, but it ultimately stopped right at the end of that breakout. And then we started marking time. Now, if we look at it again, this is kind of where HEX went, tried to go anyway, but we had those big external factors such as big payday being oncoming and all of that kind of stopped HEX from trying to tag that. So what ended up happening is that it ended up tagging it here, way in the future, right? We went all the way to 6/10 of a cent, or 6 cents, sorry, because that's the value here, and we stopped, right? And this is what we've seen all along. HEX go, stop at breakout points with respect to the adjusted HEX value. Now, we could go and stop at 12 cents before continuing higher, because that's where we stopped at recently, right? Or where we broke out recently, right? As far as the future value of HEX goes. So that's something to consider, right? And we have these values here to keep dissecting and assessing as time goes on, because things change. The system is dynamic, so all of these assessments can change as well. But the long story short is, you want to be in HEX as long as possible, because the payout per T-share is what is going to get you the gains, even if you don't stake HEX. Now, I highly recommend you stake HEX, because why take any downside risk with price when you can be printing HEX while you're at it? So it's just a simple math problem. Figure out the math and see if it makes sense. And that's really the best thing you can do, because math always provides clarity. Now here's a little bit more clarity. This is the HEX to PE ratio. Now what this number is the number of HEX you receive divided by, or let me rephrase, it's 1 HEX divided by the number of HEX you receive for your T-share. So over time, it's pretty much been the same, right, about 17% or so. But as you guys can see, it deviates over time to the downside. Now that's a function of the increase in the payout over time, right, which is typically a function of the emergency end stakes. So this is why it's important to keep in mind what's actually going on, because at the end of the day, the value proposition here is the fact that you're buying earnings at a rate of 17%, meaning that when you buy HEX and stake it, you're making your money back within 17% of a year. That's what that means. And if you're looking at something to compare it to, you can compare it to the S&P 500 price to earnings ratio, which had an all-time low of 551% versus 17% for the HEX price to earnings. So as you can see, the value is there to be had, and is there for all that want it. Now this is where we are, and this chart is a comparison chart between Apple, Microsoft, and Google, as well as Bitcoin. And what I want to show in this chart is how the network effect is pretty much the same for every asset, whether it's a stock or a crypto. The whole point of the game is that humans affect markets similarly. So over time, you're going to get similar moves. And this is what we're now going to experience in HEX. That is the network effect. That's how markets work. And if you're not in tune with that, you can go catch my first ever video on my YouTube channel, which explains exactly how cryptos work. And I ultimately go into how markets work over the next few videos, because it really is all the same. The network effect is real. The network effect is what causes the big moves in markets, because humans are adapting to that market or interacting with it. And here is the yield and where it comes from for HEX, right? If the system is staked to the tune of 9%, the APY is going to be 41. If the system is staked, meaning 10% of the coins are staked, or 9% of the coins are staked, or 15% of the coins are staked, then the APY is going to be in line with this. So if you want to know what the APY is going to be, the staking percentage of the total supply of the coins is what determines that. So take a look at this graphic and analyze it in order to determine that. But that's pretty much what's going on. Thank you guys for tuning in. Let's keep in mind that we are here, and let's keep in mind that we are here versus here, and let's also keep in mind that number only go up. This is Whales Only. You guys have a great day, and don't forget, stay long, stay strong. Have a good one, guys.